Hello, everyone. This is Tom Friend from Integrity Insurance Solutions. Due to the challenges presented by COVID-19, we thought it best that I put this presentation together online so that you can view it with the materials that we dropped off and follow through with me. And after we are finished, we're going to set up a time where we can all get on a call and discuss and answer any questions that you might have about this possible transition to an HSA for the employees at the various companies. I want to start out by showing you the first handout that I want to talk about, the Health Savings Account Basics two-page sheet. We would give this to all the employees as kind of a reference point. The basics of a health savings account, I'm sure most of you, given that many of you are already on an HSA and you've been exposed to them or their availability at the companies for years. But obviously this just explains briefly what an HSA is. One of the issues that we did track down with Richland Bank is that we've had some problems in the past where employees attempted to enroll in an HSA at Richland Bank and they were declined for some sort of probably credit reason. I've talked to the powers that be at Richland Bank, and they promised me that they will allow every employee at all of the companies to enroll in an HSA if they so choose. The basics, obviously, you have to have a high deductible health plan to open an HSA account. I have the 2021 contribution limits listed there. As you will see as we go further down in this presentation, the contribution amount for 2021 would be $650 for a single contract, and for all other contracts, two parties or families, regardless of how many dependents they have, there would be a $2,000 contribution by the ownership of the companies. Just keep in mind that the contribution maximums of $3,600 and $7,200 for a family are cumulative based on what the employee can put in after the amount that's deposited by the employer. There is a extra $1,000 that is allowable for anyone that's 55 and older on the plan to add to that number. If there is a married couple that are both 55 and over, $2,000 extra can be deposited into the account per year as long as they have individual HSA accounts set up at Richland Bank or any other bank for that matter. Briefly talks about distributions. Obviously, the big difference here is that all the money that goes into an HSA is on a tax-free basis, pre-tax basis, and all the money that comes out is not taxed as long as it's used for qualified medical expenses ever in their lives. And the money never goes away. It isn't something that has to be used or that it's lost like a flexible spending account. There is a way to continue the flexible spending accounts on what's called a limited basis. That's something we would need to discuss as to the necessity of doing that. Most of my customers, when they implement an HSA, they do away with the flexible spending accounts, but I do have some that do maintain them. And on the second page, just again, the advantages listed. This is just a take-home two-pager for the employees. If you could now transition to the PowerPoint that looks like this, that we dropped off, I'd like to roll through with you what the employees would see in the meetings that I would conduct. First and foremost, on the second page, Medical Mutual is still the carrier. Truthfully, their Medical Mutual cards wouldn't look any different than they do now. They would receive all new ones January 1st, but the carrier's the same, the network's the same. The self-funding aspect of the financing is also the same. So the ownership of these companies would be paying the vast majority of claims, just as they do now. The current plan, just to review, for the employees, as all of you know, there's a $580 single deductible, $1,160 family deductible. There's the out-of-pocket that in this case includes the deductible and the 20% of the coinsurance. That totals $1,740 and $3,480. The next page lists the copays. Office visit, urgent care, copay of $20, ER visit, $116 deductible, and 20% thereafter. The prescription drug copays here are listed, whether it's a 30-day supply or a mail-in amount. And then under the HSA, this is where we begin to talk about how different this contract works. There is a single deductible of $2,920 and a family deductible of 2 times that of $5,840. There's no coinsurance. There's no copays. So it is essentially just the deductible and 100% coverage thereafter. What's obviously very different in this scenario is that the value of the drugs and the value of the office visits, all those expenses go toward the deductible, which they do not in the current situation. And obviously any dollars that are used or spent by the employee to satisfy the deductibles are dollars that come to them on a pre-tax basis. One additional significant difference with the HSA is that the preventative services are significantly enhanced. Essentially, all well child care visits and immunizations are covered at 100% prior to having to meet the deductible, as well as adult physicals, 1 per year, plus all of the requirements for females based on their age, what are required as preventative tests, pap smears, mammograms, things like that. Again, 100% covered before the deductible is satisfied. And then on men, same deal. PSA tests, those kinds of physicals and items like that are also covered at 100%. Right now we have the $300 annual maximum for preventive services under the traditional plan. So this would be a significant enhancement under the HSA contract for preventative services. The next page, just explain the procedure. The employees, they're very concerned about this huge deductible. What happens? What do I do? It's very different. And here I just simply outline, what is the procedure? Most importantly, they need to know that whatever the dollar cost for that office visit is, that doesn't change when you have an HSA compared to a traditional healthcare plan like they have now. Go to the office, present your Medical Mutual of Ohio card. The services are rendered. We wait for the explanation of benefits to come back. You pay the value, the negotiated value of that service, and the value of that service goes toward satisfying your deductible, which hasn't happened in the past. Prescription drug procedure on the next page. Again, same thing. Go to the pharmacy, give them the Medical Mutual of Ohio card. They look at the reductions in costs that have been negotiated for those drugs. They give that drug to the employee based on that lowered cost. You pay for it, and typically you pull out your HSA debit card provided by Richland Bank, and as long as there's money in there, you pay for the drug using that HSA card, debit card. Again, talking about the contributions, they're on a pre-tax basis. We've talked a little bit among the ownership as far as how the contribution will be made. Probably the last conversation we had was that half of the contribution will be made at the first of the year. The second half, the contribution is somewhere around July 1st, but that's, again, something we can discuss in the conference call. Employees have the opportunity to contribute to an HSA in two different ways. Actually, at the same time, they could do it at the same time. Um, Payroll deduction. They could tell payroll, hey, I want so much out of my paycheck every week to go into the HSA. But they can also put lump sum distributions into the HSA account at Richland Bank anytime they might need that. They then get credit for that lump sum distribution into the HSA on the front page of their 1040 before the line item as it relates to adjusted gross income. So I usually truthfully recommend that that's how people do it, so that if something does come up during the year and the weekly payroll deductions haven't added up enough, that they still have the ability to throw some money in. I've said this, I don't know how many times over my career, but that's how I handle it. I essentially half payroll deducted the amount that I could put in every year, allowing the other half to be put in a lump sum distribution. Next page, the grandfathering provision that we already talked about, the $1,000 per person that's over age 55. And then I'd like to give real world claims scenarios. I have 4 of them here. I can do more if you so choose. But essentially, it boils down to this. The $650 number for a single and the $2,000 number for a family on the contribution side guarantees me that no matter how I compare the claims, in this case from 2019 claims, to how they would be processed under an HSA, it's always going to be better for the employee. It's mathematically impossible not for it to be that way, and that's typically how we do it first year to get the people used to the HSA accounts. But in this first one, health claim scenario number 1, these are actual employees that I pulled their claims from the companies. In this case, it's a single healthy employee. In 2019, they had medical expenses, so these could be office visits, things like that, $356.86. Prescription claims of $465.90. The expense to the employee in 2019 was $196.46. Now, after that, in parentheses, is $245.58. What that is an adjustment for the taxes that they paid to get to the $196.46. A $15 an hour employee, let's say, would have had to have earned $245.58 to have after tax the $196.46 to pay those expenses. So I'm taking the minimum, essentially, tax benefit that would be impacted by your employees. So under the HSA, the expense to the employee on a pre-tax basis is $172.76. So as you can see in claim scenario number 1, they're to the good over $70. On the second one, this is an employee who is chronically ill. They have a chronic condition. Their claims are very high every year. Again, a single employee, medical claims, $127,000 in 2019, prescription claims of $31,000. The expense to the employee was $2,694, or in parentheses, they had to earn $3,367 to come up with the $2,694 to pay those expenses. Under the HSA, their expense, $2,270. And again, this expense to the employee is taking into consideration the tax benefit and the contribution by the ownership of the companies into their HSA plan. HSA claim scenario number 3, this is a family where one person had somewhat of a large claim. So I think this was a family of 4. 3 of them did not have any claims or very minor claims, and one of them had the lion's share of these claims, almost $5,900 in medical claims, just under $1,200 for prescription claims. The expense to the employee in this case, after taxes, really $3,184. Under the HSA, $1,702.50. So you can see there's significant benefit there to that employee scenario. In this case, this is a family. I do recall this one of four, three of which they all had some stuff going on. Nothing serious, but a couple $1,000s of each of them. In this case, medical expenses of $6,709, prescription claims of $1,886, expense of the employee in real dollars, $3,468. The expense under the HSA would have been $2,880. So, as I mentioned before, these claim scenarios at the 650 an individual, $2,000 family contributions really has no chance of having a situation where it wouldn't be beneficial to the employees under the HSA. The struggle, obviously, is getting them to understand that. It's a huge educational process. We would all have to be very involved in all of this. I would personally put on the employee meetings and go through this PowerPoint and any additional items that all of you think would be beneficial to help educate them. But a lot of hand-holding, obviously, a lot of education to make it clear. I like a comment that Roger Loesch made in discussing this. We know it's financially better for everyone to be on an HSA. The struggle is educating them to understand that is a fact. And that's the difficulty, and that's what we want to make as palatable as possible to the employees. That being said, that's the PowerPoint. The other handout, after you get through this, again, if you need to watch it again, take notes, questions, suggestions on how we can make the educational process better for all the employees, with the desire to roll this out January 1st, the upcoming year. Thanks for the time, and I look forward to getting a hold of all of you on a conference call in the very near future. Thanks.